Capital FX signals, trend reversal patterns, inverse head and shoulders. The inverse head and shoulders is a bullish reverse pattern which forms after a strong move downwards. It's the exact opposite to the bearish head and shoulders pattern. It appears after a strong move down and consists of a low as the left shoulder, a lower low as the head, and a higher low as the right shoulder. And finally, a neckline, which can be drawn to connect the highs of the three peaks shown visibly. This pattern can produce three different types of necklines. First is a downward sloping neckline. This type of neckline is the weakest reversal sign, as often the price will just continue to trade lower instead of reversing. The second type is a horizontal neckline, which provides the most objective entry and target price. The third and final type is a rising neckline. This pattern has the highest probability of a successful reversal, as the price is already creating higher highs. Remember, the most important thing with these formation patterns is that the neckline is broken, as only then the pattern can be considered as completed. The price target for this formation can be measured by the height of the head of the formation, measured up from the lowest point to the neckline. To summarize, remember the key points. 1. Three peaks, with the middle one being the lowest. 2. Neckline is visibly straight. 3. Neckline is broken. Don't forget to subscribe and leave any questions below in the comments section.